वेलकम प्रेरणा मैम।
मैं बोल दूंगी।
Hello, sir.
हाँ वेलकम मैम।
Thank you.
मिनिट
Welcome all. Welcome Prerna madam. Welcome CP sir. Welcome Ankit ji. Sunny. I think more than 30 members have joined. So
Yes.
I think we can start it because it's 5 minutes past 4. So
Welcome, Nitin sir.
yes, welcome Nitin sir. Welcome Ankit.
Will we start the session?
Yes. Please start.
Good evening, friends. At the outset, myself, C.S. Sunny Savla, Deputy Convener of Bhiwandi CPE Study Circle, welcomes you all on behalf of CPE Study Circle. I welcome C.A. Vinit Arya, Convener of Bhiwandi CPE Study Circle. I welcome C.A. Ankit Agrawal, past Chairman KD Branch. I welcome C.A. Prerna Peshori Madam, Speaker of the today's session. I recognize the presence of senior members like C.P. Loya sir, Nitin Dhawan sir. I welcome you all senior members and all my dear members. Friends, this time in direct taxes, there are various changes like new TDS and TCS provision with effect from 1st July 2021, new ITR forms, new ITR website. Till today, we are all unable to file the returns due to the technical glitches of the new website, new scheme of taxation, and our major area of concern, what to do of the audit of the assessees who are having turnover below 10 crores. To learn on all the above provision, we have with us today learned speaker C.A. Prerna Peshori Madam. Welcome, Madam, and I thank you on behalf of CPE Study Circle to accept our request. Now I request C.A. Vinit Arya, Convener of Bhiwandi CPE Study Circle, to give the opening remarks and address the gathering. Over to you, Vinit.
Thank you C.A. Sunny Savla. Good evening everyone. I welcome all the senior members, colleagues, members, and especially C.A. Prerna Peshori. We are very grateful to you, madam, because you have already delivered various lectures earlier to Bhiwandi CPE Study Circle, and today also you have accepted our request to deliver today's session. Today's topic was briefly explained by C.A. Sunny Savla, and it is in the need of the hour, and all of us are making and cracking jokes over this ITRs and everything. So there are many questions with regard to these topics. So I hope you will address the queries which members are facing. Meanwhile, we also request our members to suggest any topics which we are required to, so that we can deliver the sessions on that. At the same time, I would request members to deliver the lecture as a speaker from our own Bhiwandi CP members. If anyone is interested, they can please share their ideas with us. We can go through it and arrange the sessions for them also. Not taking much time today, we'll ask CA Sakshi Agarwal to introduce today's speaker, and then CA Prerna madam will deliver today's session. Over to you, Sakshi madam.
Hello, sir, am I audible?
Yes, yes.
Hello. Okay. Hello and good evening, everyone. I'm glad to introduce such a respected and dynamic personality, CA Prerna Peshori madam. She is a chartered accountant and international tax lawyer. Currently, she is a partner at Peshori and Jain. She has about 6 years of experience in international taxation advisory and litigation, cross-border transaction advisory and structuring deals and startup advisory. She has completed her master from WU Venesa as foundation from International Tax Scholar 2019. She has been delivering lectures at various professional forums and has been teaching international tax laws to chartered accountants and advanced diploma in international tax to UK students. She has been selected as 35th 35 future leaders in taxation by Tax Corporation. She has authored many papers and books on direct and international taxation. Now I like to madam to please share his valuable knowledge on one of the most needed topic of time with us. So let's welcome CA Prerna Peshori madam. Prerna madam, over to you.
Thank you so much. Thank you so much, Sunny ji, Sakshi madam, and Vineet sir, and most importantly, Bhiwandi CP for inviting me for this particular seminar. And thank you, Ankit ji, also for specially requesting for this particular seminar. So this particular topic is very, very relevant as we are all nearing to the due date, which is not really the due date because we don't know whether it will get extended again, or we have to rush and till the last moment we have to just try filing the returns which are not going to be filed, I'm very sure, till the last date. Because today, as on 5th of August, we can see the return portal, I think, is now the new error is coming up very recently. Late filing fee is getting generated. Like till yesterday or a day before, that particular error was visible, that late filing fees was being charged even though the due date has been extended. So we really don't know how many more errors we are going to face with this website and what all problems we have to get it resolved until we reach that bridge of finally uploading one return. So now uploading one return is like a big achievement. It is like more than passing that CA final exam, that yes, we uploaded one return successfully. So that is how I think it has become with this new e-filing portal. But having said it, I think this is the first year which we are witnessing, and hence every new thing brings a lot of challenges because something new is turning up. So I think that obviously brings a lot more challenges to be faced, and even income tax department should have tested these things, but or the timing, I would say, is not really correct. They could have introduced this either much before in April, or they could have done it after the due dates. So whatever it is, we have to now face it and file the income tax returns for all our clients. And most importantly, the audit due date is still a little far away, so we have not yet experienced those because the utilities are not yet generated or not uploaded, the new utilities for ITR 5, 6 and 7. So once that comes up, again there would be whole lot of issues. So with this particular thing, I would start up today's session. I'll just share the screen. I think I'm not having the right to share the screen. Yeah, thank you. Okay, so I hope the slides are visible.
Yes, ma'am.
Okay. Yes, so now this particular session, as Sunny clearly mentioned, that is more about income tax return changes, what amendments, important amendments had taken place last year, which we need to keep in mind for filing income tax returns. Most importantly, TDS, TCS. So if you see within last 1 or 2 months, we have been just bombarded with so many different things. New IT portal, TDS, TCS, new way of doing tax returns, Java utility, DSC re-registration, so many things, and we have to just process everything and do it. So yes, it's important to know all of this in detail so that we do not miss out on anything important. So a big transition from income tax e-filing.gov.in, which was like our friendly site, and now a very alien site which has turned up, incometax.gov.in. But let me tell you, I think once these issues get resolved, I think that would be something which is much better than the earlier website. Because earlier website never used to have these kind of details or what income tax department is actually planning. Of course, they have lot many issues as of today. But I think 2-3 years down the line, when we will look at this website, we will feel that earlier website was really very okay. We want this website to continue because this is something now which is very user friendly. That is what the aim of department is. So aim of department is to create a user friendly website. They have done so many things inside it to create a user friendly experience. Of course, after changes it would look much more better than what it is existing as of today. Okay, so before we proceed into income tax portal or for that matter, ITR forms, we will just glance through what are the major amendments which are there for AY 21-22. Now, specifically, few amendments which are picked up, which are very, very relevant. One is in terms of residential status. So last year, we saw that for determining the residential status of individual, a change was done under the Finance Act. What is that change? That any Indian citizen or person of Indian origin, earlier they were called as resident in India if they were staying in India for more than 182 days. Now we have to be mindful of our clients if they have gone outside India or they have been outside India on secondment or any they have gone outside for with their family. If any of these cases are there, we have to be careful that for these kind of people, now 182 days is reduced to 120 days. But is it for all Indian citizens who are coming to India? It's not the case. This is for specifically Indian citizens who have Indian income more than 15 lakh. So for Indian citizens having income less than 15 lakh, it remains same. It is 182 days only. But for Indian citizens having total income from Indian sources more than 15 lakh, for them it will be 120 days. So this thing is something which we need to keep in mind whenever we have any clients wherein we are specifically looking at the residential status, because you need to mention whether a person is resident or non-resident. Accordingly, your entire computation, your tax rates and all will differ. Second important change in residential status was deemed residency. Now, what is this deemed residency? This was specifically for Indian citizens who are not taxable in the other country where they are living at present. So though these people would have never come to India, but they are just filing their returns in India, or they have some amount of income in India which is exceeding 15 lakhs, but they are not taxable in their home country. So then in that case, even if they are not present for any number of days in India, then too they will be deemed resident in India. So the only condition is that they will not be taxable in their home country. If they are not taxable in their home country and the Indian income is more than 15 lakh, then we will have a deemed residency provision whereby they will be treated as deemed resident of India. Here number of days of stay does not matter for deemed residency. So this is important change which has happened last year. Second, most importantly, dividend. So till last to last year, we used to have DDT. Dividends were exempt in the hands of shareholder. Now DDT has been abolished. Since DDT has been abolished, dividend is going to be taxed in the hands of shareholders. So dividend will be taxable in the hands of shareholders. You have to disclose that income under income from other sources. Also, they have said it that for the pre-filled ITRs, in the coming times, it will be pre-filled. That dividend income will also come pre-filled. But as of now, you will have to mention the dividend details under income from other sources. And necessary changes have also been made under income tax returns. Also, since dividends are taxable, now you will be able to claim deduction of interest against that dividend up to 20% of total dividend under section 57. So earlier, since dividends used to be exempt, we used to also have 14A provision. Can you please keep the mic on mute? Yeah, thank you. So earlier, when the dividends used to be exempt, we used to have 14A provision, whereby we used to disallow any interest expense against that exempt income. But now the law is allowing you to claim the interest expenditure against dividend income. So if there is any interest expense which is relating to that dividend income, you can claim 20% of the total dividend as deduction of interest expense under section 57. Even for the company's intercorporate dividends. So if the company is issuing the dividend, it has received the dividend also, then in that case, it can set it off. It can get the deduction under section 80M. So under section 80M, a company will be able to claim the deduction of interest from other domestic or foreign company against the dividend which it is distributing. So that kind of deduction is also now introduced under the Act. So this is one of the important change of taxability of dividend. TDS on cash withdrawal. TDS under section 194N. Now, if any person withdraws more than rupees 1 CR from bank will deduct TDS of 2% on sum in excess of 1 CR. So this provision has been there since 2-3 years. But what is new is that if a person has not furnished ITR for past 3 financial years and the time limit has expired, then in that case, if he withdraws cash more than 20 lakhs, but less than 1 CR, then 2% TDS would be deducted. And if he has not filed the ITR and he withdraws cash, more than rupees 1 crore, here it should be cash withdrawal more than rupees 1 crore, then it will be 5%. So if ITR is not furnished for past 3 financial years and the time limit has expired, cash withdrawal is more than 20 lakhs, but less than 1 CR, TDS will be 2%. If the cash withdrawal is more than 1 CR, then it will be 5%. In normal cases, it is going to be 2%. So banks are deducting this type of TDS on cash withdrawals in excess of 1 CR or 20 lakhs. And this will be reported in Form 26AS. Necessary amendments have been made under the income tax returns form also, wherein you will have to disclose this 194N TDS. You can claim that, but you will also have to offer the income. Now, this is cash withdrawal. This is not necessarily an income. So this particular TDS is on cash withdrawal. This is not on income. Withdrawals are not necessarily income. But why the government is imposing TDS on cash withdrawal, even though it is not income? To capture the undisclosed income transactions. So government will get to know that if such a huge amount is withdrawn from bank, therefore the person should also report it as its income in some or the other form, or it could be income of somebody else to whom you would have given this amount. So to discourage undisclosed income, to discourage black money transactions, this particular TDS provision has been introduced. Next. So these are the three important amendments which I wanted to cover with you, which are very well relevant from filing of income tax returns form. Next most important amendment, which I think all of us will have to decide for our clients before we file the return, which is new optional personal tax regime. Now, this 115 BAC provision was introduced, new optional regime, whereby you have lower tax rate and higher slabs given. So the slabs are up to 2.5 to 5 lakh, you have 5%, which is same. So any person having between 2.5 to 5 lakh will have the same tax rate, 5%, under new also, under old also. 5 to 7.5, it is 10 lakhs. Whereas when you go to 5 to 7.5 or 5 to 10, you have 20% under the old rate. So in the old regime, you have 5 to 10 lakhs, you have 20%. But here you have 10%. Then 7.5 to 10 lakhs, it is 15%. 10 lakhs to 12.5, it is 20%. Whereas above 10 lakhs, in the old regime, you have 30%. 12.5 to 15 lakh, you have 25%. And income above rupees 15 lakhs, you have 30%, which is again same. Now, if you go for optional regime, because this seems very lucrative, the slabs are bigger. At the same time, the tax rates are lower down. Because if you see 5 to 7.5, whereas it was 20, now it is between 10 and 15 up to 10 lakhs. So therefore, can we really go for this regime? The answer depends on that whether you want to or whether you have investments or not. Because once you go for optional personal tax regime, you have to forgive all the deductions which you have claimed. What are the deductions which we have to forgive? We cannot claim standard deduction of 50,000 under the salary. We cannot claim professional tax deduction, leave travel allowances, house rent allowances, interest on housing loan on self-occupied property or vacant property. Any chapter 6A deduction, which is your life insurance premium, your medical premium, you cannot claim all of these. Except you can claim under 80 CCD2, which is the employer's contribution to the pension fund, and 80 JJAA, which is for the employment, which is for the employees which we have. So all these deductions, if you forgo, then only you can go and avail the new tax regime. So now you would ask me generally that is it really beneficial for anybody, this new tax regime which has come up? Because everyone would have one or these deductions, profession tax, standard deduction, so everyone has it. We always have LIC, medical, or other kinds of FD investments we have. So then is it really beneficial? The answer is yes. In some cases, it is. So where the person does not have enough deductions, then in that case, the new regime may be better for him. So you will have to compare for your clients whether the old regime is beneficial or the new regime is beneficial. So before we file this ITR, we will have to make this comparison. And this is not just for salaried employees. This is even for sole proprietors, which we would be having. Because this regime is applicable to all individuals. So when we have to exactly do this, when we have to exactly give this or exercise this option, for salary taxpayer, it is at the start of the year, because the salary taxpayer at the start of the year has to submit the declarations also to the employer. So salary taxpayer at the start of year in the month of April only has to convey his option to the employer that I want to go for new regime or old regime. He has to, based on his estimated salary during the year, based on the estimated deductions which he has during the year, based on that, he can exercise the option and inform the employer accordingly. Now, once he has informed the employer, once he has declared to the employer, say for example, he has declared to the employer that he is going for old regime. And during the year, he changes his mind that I did a big mistake by going with the new old scheme. I think I'm better off with the new scheme. So what I should be really doing? Can I change that? The answer is no, you cannot. Once you have submitted your option to the employer will continue with that option till the end of year. What you can do is, while filing your return of income, you can change the option. So when you're filing your return of income, you can exercise the option of new regime. But at the time or during the year, once you have exercised one option, then you cannot again and again tell your employer that you have to change that option. So you can only change when you file your income tax return. You can claim the refund of excess taxes which would have been deducted. For non-salaried taxpayers, they have to exercise the option at the time of filing tax return. They do not have to inform anybody during the year. So for sole proprietors, they can, or professionals, they can exercise the option at the time of filing tax return. And for them, for professionals and businessmen, they cannot change the option year on year. Once exercised, that option will continue forever. And once they exit from that option, they cannot again go back to that option. So this particular option is only available for salaried taxpayer, that they can change from new to old. They can switch between new to old regime year on year basis. Non-salaried taxpayer cannot do it. And if you opt for the new tax regime, be mindful that you have to file Form 10IE before the due date of filing return of income. So before you file your return of income, you also need to file Form 10IE. So do not miss out on that, because it might happen that you file your ITR, but you also need to file Form 10IE. I see some doubts, hands raised. If anybody has doubt, you can ask me also, or we can discuss at the end also. Okay. Now, what are the changes in ITR? Having said about the amendments which are important, what are the changes which are there in ITR? I am restricting my discussion to ITR 1 to 4 because 5, 6, 7 are not yet released. So I'm not going towards that. And first we have the deadline of 1 to 4 only. So keeping my discussion over 1 to 4 only time being. Under ITR 1, for whom ITR 1 is applicable? So ITR 1, Sahaj, always a very simple form. Not too much of tamjam into that, not too much of reporting into that, right? So individuals having income up to rupees 50 lakh. Salary, pension, income from house property, one house property. Excluding brought forward, carry forward losses. If you have losses against house property, losses from house property in terms of interest, then you cannot go for ITR 1. So ITR 1, if say you have rental income, then you can go for IFHP, and only one house. If you have rental income from only one house, you can go for ITR 1. Income from other sources, agriculture income up to rupees 5,000. Yeah. Not applicable for director of a company. So a director of a company cannot file ITR 1. Similarly, individual who is having investment in unlisted equity shares cannot file ITR 1. Withdrawing cash in excess of 1 crore or 20 lakh limit, which we just discussed under 194N. So if a person has withdrawn cash in excess of 1 crore or 20 lakhs and the TDS is deducted under 194N, then you are not eligible to file ITR 1. Assessee receiving sweat equity shares. So now there is a new regime, new tax provision has come up for assessees receiving sweat equity shares from the startups. So if those are the assessee who have received sweat equity shares or ESOPs from startup, they cannot file ITR 1. Non-residents, resident and not ordinary residents, residents having income or asset outside India cannot file ITR 1. So ITR 1 is only for salary pension, one income from house, one house property, income from other source, and agriculture income less than 5,000. Then only you can file ITR 1. What are the changes into it? As I said, now we have to declare whether we are going for the new regime or the old regime. So in the part A, general information, you have to tick whether you are opting for new tax regime under 115 BAC. Also, as I said, if you are ticking here yes, then you need to file form 10IE also. So that is what you have to report under the general information. This is applicable for ITR 1, ITR 2, ITR 4 also, and ITR 3. Yeah, 1, 2, 3, 4, all of it, we will have to declare this. So that is something which you have to clearly reflect here. Next, under income from other sources, as I said, now dividend is taxable. Dividend is taxable in the hands of shareholder. So in the income from other sources, you have to give a quarterly breakup of dividend income for the purpose of computing 234C. So for the purpose of computing 234C, you have to give the quarterly breakup of dividend income under income from other sources. So this is something which is a change which was not there earlier, because earlier dividends were exempt in the hands of shareholder. Now it is taxable in the hands of shareholders. So therefore you have to report it under income from other sources. So these are the two changes under ITR 1. Not any major change into it, except you have to just give the information about the tax regime you are opting, and the dividend you have to give the quarterly breakup. That's it. ITR 2 is for everyone else who does not have business profession income. So if you have salary income, income from more than one house property, capital gains, income from other sources, foreign assets or income, you are director of a company, you are non-resident or resident, not ordinary resident, investment in unlisted shares, all of that, if it is there, for those who are not filing ITR 1, will automatically go to ITR 2. ITR 2 is a very detailed form. Under ITR 1, say for example, there is an individual who has capital gain on listed shares, or who has capital gain on sale of property. So he has to go for ITR 2. He cannot go for ITR 1. So ITR 2 is for everyone else other than PGBP. Now, what are the changes in ITR 2? Same as I said, the first change is under the general information, you have to report whether you are opting for 115 BAC. Second change here is under Schedule CG. Under Schedule CG, there is one more important change which is there, which is in terms of that earlier, for the purpose of computing the stamp duty value, earlier for section 50C, the difference between the consideration received and stamp duty value, 5% difference was allowed between the stamp duty value and consideration. So if the difference is more than 5%, then we used to take stamp duty value for the purpose of computing capital gains on sale of house property. Now that has been extended to 10%. So now the difference between sale consideration and stamp duty valuation, if it is between 10% range, the range value is 10%, then you may not take up stamp duty value. You can report the consideration. You can compute the capital gain on the basis of actual sale consideration. If it is more than 10%, you will have to take stamp duty value. So that is just an information which is appearing under Schedule CG. That in case the full value of consideration does not exceed 1.10 times of stamp duty value, you can take the actual sale consideration. If it exceeds, you can take the stamp duty value. So this is just an informational change or the disclosure change which has happened. Nothing to do from our side. Only thing is we have this new provision which we have to keep it in mind. Next, again in Schedule OS. In Schedule OS of ITR 2, which is other sources, with relation to the dividends, we have again change over here. So we had the change under ITR 1 also, wherein we had to report the quarterly breakup of dividends. Here also there is a detailed bifurcation of type of dividend. Dividend received by non-resident, dividend distributed by real estate investment trust. So there are different categories of dividend which are to be reported wherever, whatever is applicable appropriately. So a detailed breakup is given over here. Now, why we have a detailed breakup in ITR 2 and we don't have that kind of breakup under ITR 1? Because dividend is taxable. So therefore, under ITR 1, we had to give the quarterly breakup. Here also we need to give quarterly breakup, but here we also have to disclose in the appropriate column based on the dividend which is there. So why this kind of breakup exists in ITR 2 and it was not there in ITR 1? The answer is very simple. That in ITR 1, we only had the filing by a resident person. Here we also have filing by a non-resident, because ITR 2, even a non-resident can file. Non-resident cannot file ITR 1. So there are different rates applicable for dividend received by non-resident vis-a-vis the dividend received by resident. So when a dividend is received by resident, the tax rate is different. Dividend is received by non-resident, the tax rate is different. That is why we have bifurcation over here as to dividend is received by whom and what is the category of dividend. So accordingly, under Schedule OS, we have to fill it in the appropriate column. Then deduction under Section 57. Interest expenditure, as I told you, up to 20% of the dividend income is allowed now. That you can claim it as deduction under Schedule OS as deduction under Section 57(1). So again, that is the change which has happened in ITR 2. Then under Schedule TTI, tax on total income, there is just a separate column which is put up, separate row which is put up, which is tax deferred relatable to income on perquisites received from employer being an eligible startup. So as I told you, now the employees who receive sweat equity shares or ESOPs from startup have different taxable provisions. So for purpose of that, a separate disclosure is being asked on tax deferred relatable to that income. So on ESOPs which are received by the employees of startup, the tax amount on that has to be separately disclosed under Schedule TTI. So that is just a change in ITR 2. Again, not very major changes. The specific changes are more in terms of 115 BAC and the dividend income and interest income. Moving to ITR 3. Again, ITR 3 is applicable for individual and HUF who have business or professional income. Now, what are the changes in that? Again, the same changes. You have to give the bifurcation of the dividend. You have to give the quarterly breakup of dividend for the purpose of computing 234C. Increase in audit threshold limit. Now, as you are aware that audit threshold has been raised from 1 to 5. And now this year, particularly from 5 to 10 CR. Now, this audit threshold which has been raised, a question which arises now is that for the businessman who has turnover less than 10 CR, Now this 10 CR limit or the earlier 5 CR limit which was there was specifically only when you have 95% digital transaction, when you have 95% payments and receipts in digital mode or through digital mode. If you have more than 5% in cash mode, then the old limit of 1 crore is applicable. But if you have 95% digital mode payments or the receipts, then you have the turnover applicability of 5 crore in the last year and 10 crore from this particular year. Now the question which arises is that for businessmen who have turnover less than 10 CR, and they have 95% of payments and receipts in digital mode, whether they would be still required to do audit because their turnover is more than 1 CR. So that is the question which is generally being asked. I wish to ask you, you could give me your replies in chat boxes. What do you think? Whether the turnover, if it is less than 10 crores, more than 1 crores, whether you would be still required to do audit, or you can opt for 44AD also. Two questions. Whether you could go for then 44AD, compulsorily you have to go for 44AD, or you can choose your own profit rate. What do you think? You can give me the answers in chat boxes. Yes, Hiral, you are saying choose own profit range. But what about audit applicability? Yes, can go for 44AD, but the turnover should be less than 2 crores. Yes, perfect. That is actually a correct answer, Roshni. So, yes, we do not need to compulsorily go for 44AD. Because 44AD, the limit is still 2 crore. Right? Here, if we have less than 10 CR, here if we have the turnover less than 10 CR, more than 1 crore, say for example, it is 5 crores, then in that case, we need not go for any audit. Because if we have digital transaction, the audit limit is 10 crore. Or in the last year, 5 crore. Now, you need not compulsorily go for 44AD also, because 44AD, the criteria is up to 2 crores. So you can declare whatever profits you have, the actual profits. You need not compulsorily go for 6% or 8% profits. So I hope that is clear. And what is the other disclosure in ITR 3? Again, the optional tax regime, because ITR optional tax regime is also applicable for businesses. As I said, they have to declare that during the filing of return of income, before filing of return of income, they have to declare that whether they are opting for the new regime or old regime. If they are opting for new regime, they do not have the availability of certain investment-based deductions, which are there under ATIA, ATIB, all of that, 10AA. They cannot claim additional depreciation. They can claim normal depreciation, but they cannot claim additional depreciation. So ITR 3, we have to keep these things in mind. Coming to last ITR, ITR 4. Now ITR 4 is for resident individual or HUF or firm other than LLP, whose total income is less than 50 lakhs. So what is specifically under ITR 4? Sorry. I guess 1 second. Yes, sorry. So specifically under ITR 4, we have presumptive income. So those who are offering their income under 44AD, ADA or AE, they have income from salary or pension, one house property, no brought forward, carry forward losses, income from other sources, they can go for ITR 4. Say for example, they have presumptive income, but they have more than one house property. Then in that case, can we go for ITR 4? The answer is no. We cannot go for ITR 4 if we have more than one house property. So even though you have presumptive income, but you have income, say for example, you have rental income from 2 house property, then you cannot go for ITR 4. You will have to go for ITR 3. You cannot even go for ITR 2 because ITR 2 is not applicable for business or profession. So you have to go for ITR 4. Sorry, ITR 3. I hope that is clear. And what are the changes in that? Sorry, not applicable for, again, director of a company, investment in unlisted equity shares, any asset or income outside India, deferred tax on ESOPs. As I said, the employees who are from eligible startup, they receive ESOPs, they have a different tax treatment. PGBP or speculative income, capital gains, brought forward carry forward losses, income from outside India, deduction under section 57 against the dividend income, then you cannot go for ITR 4. You have to go for ITR 3. So say for example, you have dividend income, against that you have interest expenditure, you cannot go for ITR 4, you have to file under ITR 3. So I think somebody is, these slides are getting changed by itself. I'm not even moving it. Can you please check?
Sakshi? Hello, Sakshi ma'am.
So I'm not changing the slides. I think it is getting changed by itself. So is there something?
I will get check, ma'am. You just continue.
Sorry?
I'm
Sakshi
asking
madam.
the coordinator to check.
Okay.
Just a minute. Sakshi madam.
Hello.
Yes.
Yes.
Yes, the slides are getting changed automatically. Just
Hello. Hello. Hello, Prerna madam.
Yeah,
Ma'am, you can continue. There is no setting issue from here.
because I'm not changing the slides. It is again and again happening by itself.
Okay. But
Okay,
actually, no.
okay. No problem. I'll continue. Yeah.
Okay. Yeah.
Madam, try once by resharing your screen.
Okay, sure. Okay. Yeah. So what are the changes in ITR 4? Same as ITR 1 only, not major changes. Again, same, you have to select optional personal tax regime if you want to go for that. And schedule for dividend, wherein you have to give the quarterly breakup of dividend. So not a major change in any of these ITRs for which we have to worry really. Now coming to what we have to really worry for is the income tax portal, because that is not functioning appropriately. Now let's navigate through the income tax portal. let me leave these slides aside and let me take you directly to the income tax portal. So I'll again share my screen to show you this income tax portal. And you could raise your concerns simultaneously because everyone has concern, different concerns people are facing. It's not working similarly for everyone. Okay, I hope it is visible now. Okay. So yeah, this is the new income tax portal, and this is supposed to be very user friendly, although at present it is not really, but yes, it is supposed to be that. So what exactly are the features of new income tax portal? Now this particular portal, if we see, is built on 4 parameters, which is speed, accuracy, convenience, and usability. And income tax department has not achieved any of these 4, but it is built on all these 4 parameters, that it is going to increase the speed from the earlier website. It is going to be more accurate. It is going to be convenient, and it is very usable. But sadly, we witness otherwise in all of these 4 parameters. But what is very good is with respect to this particular portal, that it is in a way a kind of a guide all across. So if you see, there are lot many guides available whenever you are looking at a particular thing. So say for example, under these tabs itself, you have a clear-cut breakup of guidance to file ITR for different categories, returns of forms applicable, tax slabs which are there, deductions on which you can get benefit, assisted filing. All of that is appearing over here, which was never earlier. Earlier, we used to just have download utility and one-liner statement was there that this form is applicable for so and so. Of course, we used to have FAQs, but here it is all the more, very, what do we say? Very clearly bifurcated, very clearly mentioned, and it is in some or the other way really helpful when you are not aware about how to approach a particular ITR or which ITR would be applicable for you. Let's take an example, salaried employee. So here it is showing guidance to file ITR. They have given user manuals and FAQs for ITR 1 to 4 because these will be available for the salaried employee. Then if you see returns of forms applicable to me. So here they have given what are the sources which will get covered under ITR 1, who cannot use ITR 1. Similarly for ITR 2, 3 and 4. Also, if we see tax slabs are given over here, what we already discussed, the new regime, old regime for different age groups is mentioned. Then if we see deductions which are there on which you can get benefit. Yeah. So all of that is clearly and specifically mentioned over here. So these are different deductions for which different rates, different amounts, limits are prescribed, and everything in detail is given. You do not need to go to section and find out specifically what is the limit, what are the amounts. Here itself at the filing side, you will find everything. So that is something which is seriously a good move by Income Tax Department. Similarly, if we see on the home page itself, various services are offered for which we do not even have to log in. E-verifying the tax return, linking Aadhaar, e-payment of taxes, status of e-filed returns, verifying PAN, applying PAN also, the e-PAN which is there, instant e-PAN which is there, know your AO, TDS on cash withdrawal. So many of these things are given on the homepage itself for which you need not even log into the SSC's account. So all of these services can be availed from homepage. Like for example, you have to link Aadhaar. So you can do it just straight away from here without even logging it into the page of SSC. You have to enter PAN, you have to enter Aadhaar number, and that's it. Similarly, if you want to e-verify your tax return, you have to just do it from the home page. You need not go into the login page of the SSC. You have to enter PAN, assessment year, acknowledgement number, and that's it. You are done. Now, one more important thing is this. There's this Genie which appears, and this Genie is answering few queries. Of course, the response is very delayed. Sometimes it doesn't happen. But of course, again, as I said, it is created for being user-friendly, and that is something which has been developed as part of that user-friendly exercise. So this is all about the homepage which is there. Now, moving to the specific login of the SSC, which I would do and show it to you, how exactly the page is looking and what exactly are the issues which are coming up. So just give me a moment. Okay, so this is the login page which appears once we log in for any particular SSC. Now, at the start itself, you get how much tax has been deposited by the SSC. Now, this SSC has not deposited any tax because he is not taxable. But you get a clear idea as to what tax he has paid over the years, over in 2 years, 2021, 22. Similarly, you also get about the income which he has offered for 2 years. What was his taxable income? What was his tax liability? How much tax was deposited? So here you can clearly see the comparison, because once we start with any income tax return, we usually compare it with the last year, whether there has been increase in the income and why that increase has happened, or whether there is a decrease, why that decrease has happened. So that way a comparison is offered at the homepage itself of the login of the SSC. So this is something which is very useful. Now going further, here if we see, we have an option of e-filing income tax returns, wherein you can file income tax returns. Let's see. Now here the income tax return, you have to select 21-22, which is the current AY, and continue. Now two modes are being offered, online, offline. Offline also would be through a Java utility. Start new filing. JSON utility, not Java, new filing. Here you can select individual. Now this return is more like, answering the questions. Here you do not have to really break your head. It is like answering more so from questions perspective, that the questions are being asked to you and you have to keep filling up the answers. Now ITR 1, say for example, again, if you see here, it clearly shows for whom ITR 1 is applicable and for whom it is not. So as I said, this website gives lot of guidance at each and every place where we have to, choose the options. It gives us a lot of guidance in terms of choosing the correct option. Now, if I proceed with ITR 1, let's get started. See, as I said, it is more like answering the question. It's more like you're filling some Google form. Are you filing income tax returns for any of the following reason? So yes, taxable income is more than basic exemption limit, say for example. If not, then whether you have deposited more than 1 CR, whether you have incurred expenditure more than 2 lakhs on foreign travel, whether you have more than 1 lakh consumption of electricity. So for what purpose you are filing the return, you will have to give it here and you will have to continue. Now it says we have pre-filled your return based on information available with the income tax department. Please confirm the details in the section. So here they have given me my personal information, bank account details, all of that is given. I have to select filed under 139.1, 139.4, whatever is applicable. Bank details, you will have to validate. And next, you will have to just confirm this. We have to select nature of employment. Say, for example, I select others. So here, are you opting for new income tax regime? As I told you, say, for example, if I do no, and then we do confirm. It gives you gross total income. Again, it is more like see yes or no question. Are you eligible to claim exemption in respect of cost on travel, other allowances, HRA allowance? Say, for example, I say yes or no. Accordingly, I'll have to fill in the amounts and then I will have to continue. Here we can add income from salaries, income from house property, all of that we can add it. And that will lead us to total deductions, taxes paid, and total tax liability. So unlike earlier, this income tax return forms are fairly simple to fill. Of course, very difficult to file due to the new portal. But yes, they have been improvised a lot in comparison to the previous portal. Now, this is how about we file the income tax return. You can file all the 1, 2, 4, whatever income tax return is applicable from here. You can see the e-filed returns, but it doesn't allow you to download sometimes. So there is a problem if you download the form or XML of previous returns file. That problem is being there, that earlier ITR files are not available for download. Earlier ITR acknowledgements are not getting downloaded. Sometimes earlier ITR file is being shown as not processed, even though we have received 143.1 already. So these are the problems which are being faced. What is resolution to that? Nobody knows, because it has to be resolved from department side itself. You will have to wait and watch. There is no particular resolution. You don't have to do anything. These are the system errors which we are getting from department side. Secondly, e-verify return. Earlier, the returns were not even getting e-verified. Now, thankfully, returns are getting e-verified here. So e-verify return, as I said, you can also do it from home page without even logging into the assessee's portal. Third is view form 26AS, download pre-filled data for filing offline. All of that you can do. Then income tax forms. What are the income tax forms which are being made available? So there are different forms which have been made available. Form 10 for the trust registration also now has been issued. But again, it is showing lot many errors. It is not taking up trustee details. And therefore, there's a problem in filing trust registration form also. But there are a lot many new forms which are being available. Here, we have different forms depending on business income, not dependent on any source of income. We have equalization levy. We have C10I for the purpose of exercising option under 115 BAC. As I said, Form 15CA is being made available over here. However, that is not really functioning. So 15CA and 15CB, we have been filing offline with the department, and that is till now 15th August. We have that deadline available. Appeal form has started. Earlier, appeal form also was not getting filed. We have Vivad Se Vishwas, we have foreign tax credit form. Different forms are being made available. Few of them are getting filed, few of them are not getting filed. Next, importantly, adding my CA. This we will have to do it for specifically audit cases. Here, you will have to authorize. Let's get started. You'll have to add authorized signatory, reason, any other reason, you will have to specify reason, PAN of authorized signatory, name as per PAN. So you can add all of that if you want to authorize somebody else. Similarly, you can add chartered accountant also for the purpose of 15CA, 15CB. You will have to add chartered accountant for purpose of audit reports. And then once you add chartered accountant, he will have to accept it. Once he accepts it, then only he will get added as your CA. So that is how you will have to add chartered accountant in the income tax filing portal. Next is, give me a second. Yeah. So here is how you will add CA, membership number, name, chartered accountant, valid form and till, and then a request will go to him. Next are services, refund reissue request. Again, that is something which is not really working. Even if we are creating, it shows us error. Refund reissue requests are not really functioning. So this is something which is creating a lot of issue. Next is here, condonation request, generate EBC, all of that is very fine. View or download EPAN, manage your ITDREN, which is your reporting portal. Here you will see pending action, work list, demand, response to outstanding demand. Now, there are certain cases wherein we have already given the responses. We have raised the grievances also in the earlier portal, which are not getting reflected in the new portal. Even for e-proceedings, it was not earlier functioning. Now it is functioning. But again, there are a lot many issues. The earlier notices which were there are not visible. The responses you have filed are not visible. For defective notices, there are huge number of issues which are coming because you are not able to file the response to the defective returns. You are not able to file response for the defective return. That is a big problem which is coming up. So all these problems are existing under the new portal, and there is no clear-cut resolution for the same, but it will be resolved in due course as have been claimed by Finance Minister. Now, if you have any specific doubts relating to the portal, you could ask me. Whatever queries you are facing in this portal, you can put it in the chat box also.
Is it mandatory to add CA name as an representative?
Mandatory if you have 15 CA, 15 CB, if you have tax audit report.
For filing of simple return, is it mandatory
No,
to add?
it is not. No, you don't need to add CA for filing income tax returns.
And further, for that traces ka login we have for all the TDS 10 deductors, but again we have to create login here in the new portal.
Yes, you have to.
For reporting portal, you are saying ki we have to.
Yes.
For all,
because because that is for traces, and this works for income tax department. So specifically for checking the compliance utility for your TDS purpose, you will have to create a new login under this particular portal through your TAN.
But again, that TDS certificate and everything you have to do through the traces only.
Yes, you have to do through traces only. So traces is very functional. There is no problem with traces. It's only the earlier site has merged with the new one. Also, as I said, the new returns are facing issue with respect to late filing fees.
That new utility still has not solved that issue.
Yes, so that is something which we cannot do with it anything. That is something which a problem is coming, and it will be rectified. It has been highlighted to income tax department. Yes, not able to upload appeal form, Kshitija. Yes, that is a problem. It has been working now, but we are not able to upload the appeal form. There are issues coming with it. And DIN, they are not even giving the DIN. With the DIN which is there on the order is not really accepted. That is very correct. So yes, that is a problem. We'll have to wait for it to get resolved. Because DIN given in orders are not really correct too. You can verify the DIN on the homepage itself, where we saw that there is an option of verifying the DIN. So if you see here, I'll quickly show you. Let me just log it off. Authenticate. Here you can authenticate and know whether the DIN is correct on the notice or not. Here you will have to authenticate your notice, whatever is received, and from that you will be able to know what type, whether this notice is really authenticated and the DIN is correct or that or not. Yeah.
So many people has received the intimation but not received the refund.
Yes, as I said, for refund, there is again a problem that refunds are not being received on time. Of course, that will be received in due time. Nothing much could be done on that aspect as well. Even the refund reissue requests are not getting accepted. So that is again, which is a big problem which is happening.
And even the rectification, we are not able to file on the site.
Yes.
Rectification request.
Yes, for defective notices, defective returns which are there, the rectification are not really happening and the time limits are getting expired. So that is again, which is a big problem being faced on this new portal. Yeah. Any other query in specific with relation to this portal? Okay. If not, let me just show you how we can do 15 CACB. As I said, is let me just take you to the slide again. Okay. Now 15 CACB is being introduced in this new portal, but 15 CACB is being modified. So this is how earlier 15 CACB used to be there, and now you will have to log in. As I said, you will have to appoint the chartered accountant. The chartered accountant has to accept the client and only then he will get added as a CA. When you have to obtain 15 CB, you will have to fill part C of 15 CA. Once you fill the basic information of 15 CA, you assign 15 CA to your chartered accountant. He will accept as the assignment. He will then fill 15 CB. He will fill all the 15 CB information. He will file 15 CB. Now that will appear in your work list. You will have to accept that 15 CB. Once you accept that 15 CB, then your other balance information of 15 CA will get pre-filled. You can e-verify that and then you will submit it. So that is how the 15 CACB process is going to work. However, it is not really operational as of now. It is not getting filed from the new portal, and hence we are filing the physical 15 CACB till the time it gets resolved. So for that, the date has already been extended. But this is how it will look once it gets started. So here you will have to fill part C, and then it will ask you assign form 15 CB to your CA. So before submission of part C of 15 CA, you will have to assign form 15 CB to the chartered accountant using my CA functionality. So that is how the 15 CACB will be filed after it becomes operational. Now, next very important part coming to, which is another headache created for all the professionals, which is TDS under 194Q and TCS under section 206C1H. This is where we are facing a lot of issues because we are not very clear with respect to whether the TDS should be deducted or TCS should be deducted. TCS should be collected. This provision was introduced, TCS provision was introduced in the last year itself, wherein from 1st October 2020, it asked us to collect TCS on sale consideration greater than 50 lakhs. So the first thing which we will have to see whether the turnover of the buyer or the seller is exceeding 10 CR. If it exceeds 10 CR in the previous financial year, so you are looking at your current year, but you will have to look for the turnover in the last financial year. So say for example, it is 21-22. You will have to look the turnover of 2021, whether it is exceeding 10 crores for the buyer as well as the seller. Now coming to the seller's responsibility, because that was issued in 2020, that particular provision was notified in 2020. The seller had the responsibility to collect TCS on sale consideration greater than 50 lakh. TCS at the rate of 0.1% and no TDS and TCS if the amount is less than rupees 50 lakh. Coming to the buyer side, which is a new provision effective from 1st July last month. Now, in this particular provision, buyer is being made responsible to pay TDS, to deduct TDS on purchase exceeding rupees 50 lakhs. So TDS has to be deducted under 194Q on amount exceeding rupees 50 lakh at the rate of 0.1%. Now, both of them have the responsibility. So who has the first role to discharge this responsibility? whether seller has to collect TCS or the buyer has to collect TDS. Because this is a particular provision. If we say both have turnover rupees more than 10 crore, then who has the primary responsibility? So the act says primary responsibility is of the buyer to deduct TDS. If both are liable to collect TCS and deduct TDS, then it's the primary responsibility is of the buyer to deduct TDS. If the buyer fails to deduct TDS, then it becomes the responsibility of the seller to collect TCS. So first we'll have to see whether the purchase is greater than 50 lakh. If yes, then TDS will apply. If it is less than 50 lakhs, but say for example, the consideration has been more than 50 lakhs, then in that case, TCS will be applicable. So this is how this particular provision functions. Now coming ahead, these are the practical cases which I have included. So let's take it one by one. Say for example, turnover of seller in crores is 7. Turnover of buyer is 15. Sale of goods is 55. Sale consideration paid during the year is 45 lakh. PAN of buyer is available and seller is also available. Now who is liable to deduct TDS? Since the turnover of buyer is more than 10 CR, it is the buyer who is liable to deduct TDS and seller is not required to collect TCS because the turnover of seller is less than 10 CR. On what amount it will be collected, 55 or 45? It will be on 55 because TDS is on purchase of goods. TCS is on sale or consideration. So there is a difference. So here TDS will be deducted on 5 lakhs, amount in excess of 50 lakhs. On that 5 lakhs, we will have TDS at 0.1%. Taking case 2. Turnover of seller is 15, turnover of buyer is 6. Sale of goods 59, consideration 52. So on what amount we will have to deduct TDS or TCS? Here, turnover of buyer is less than 10 CR. So it becomes seller responsibility to collect TCS because his turnover is 15 crores. On what amount? 59 or 52? As I said, TCS is on sale consideration. TCS is not on invoice. TCS is on the consideration received. Although many people charge it in advance on the invoice amount only to make it practically feasible, but it is on consideration which is being received. So on 52 lakhs, it will be collected, which is like in excess of 50 lakh. On 2 lakh amount, 0.1% will be collected. Case 3. Buyer has turnover 16, seller has turnover 18. Both have turnover more than 10 CR. We have sale of goods 65, we have consideration received 60. Now, who is liable to deduct TDS? Whether buyer or seller is liable to collect TCS? Because both have the turnover more than 10 CR. So, as I said, the primary responsibility is of the buyer. It is the buyer who has to deduct TDS on 5 lakh rupees. Consideration in excess, 15 lakh rupees, consideration in excess of 50 lakhs, which is 65 minus 50. On 15 lakh rupees, here we will have to deduct TDS. Next case.
In the 15, table, it is wrongly written 5.
Yes, it is 15. Yeah. Next case, turnover of seller is 15, turnover of buyer is 11. Now, in this particular case, whether TDS will apply or TCS will apply. Sale of goods is 45 lakhs. Consideration is 60 lakhs, including of last year. So the sale of goods during the year may be 45, but TCS, whether it will apply or whether it will not apply because sale of goods is of 45 lakh, but the consideration is received is 60 lakh, which includes consideration for the last year invoice also. So yes, your TCS will apply and not TDS because the invoice amount is less than 50 lakhs. TDS will only apply when the invoice amount is more than 50 lakhs. Here the invoice amount is less than 50 lakh, but the sale consideration is more than 50 lakhs. 10 lakh rupees we will have TCS and not TDS. Next case, turnover of seller is 7, turnover of buyer is 16. Now sale of goods is 56, the invoice amount, sale consideration is 30. Now whether in this case TDS will apply or TCS, TDS will apply because turnover is more than 10 CR, sale consideration is less than 50, but invoice amount is more than 50. So on 6 lakh rupees, TDS will be applicable under 194Q. Now, next thing, clarifications.
Excuse me, madam.
Yes.
What rate? Because PAN was not available either of the buyer or of the seller in the last case study.
Okay. So here, yes, it should be your yes, PAN of the buyer seller is available. If it is not available, then it will apply at the higher rate of 5%. So if the PAN of buyer and seller is not available, then it will be 5%, because there is operability of section 206. What does that section says? That if buyer or seller, so say for example, sorry. Can you please mute your mic? Okay. So there is new provision 206, which says that from the perspective of buyer, if the seller does not have PAN or the seller has not filed the return of income of past 2 years, if the seller has not filed the return of income of past 2 years, then in that case, he will have to, the buyer will have to deduct TDS at higher rate of 5%. Otherwise, it will be 0.1% if the return of income is filed by the seller. Now, practically, how do we check all these situations? That whether the turnover of buyer is more than 10 crores or whether I should be collecting TCS as a seller, whether the buyer has filed the ITR of last 2 years or whether the seller has filed ITR of last 2 years. So people are taking declaration, but that is not correct. You can, of course, take declaration with respect to turnover. With respect to turnover and with respect to your liability, you can take declaration. You can ask the buyer to declare that his turnover is more than 10 CR or not. Or you as a seller can just declare that your turnover is less than 10 CR and therefore you are not liable to collect any TCS. Or you can just say that you can declare that you will collect TCS, therefore buyer may not collect TDS. Buyer may not deduct TDS, because once a seller collects TCS, even though he is not liable to collect, even if the seller is not liable to collect, but he collects TCS, safer side, all the precaution, he collects it, then in that case, the buyer is not liable to deduct TDS. So seller can submit these declaration. But with respect to filing of ITR, there are people who are asking for declaration with respect to filing of ITR, whether you have filed 2 years ITR, whether or give us your acknowledgement, give us your form 26AS to verify whether your TDS is more than 50,000. So therefore, these declaration, ITR acknowledgement, form 26AS are not to be given, because income tax department has come up with its utility for 206AB and 206CCA. What is that utility? This particular compliance check is available. We will talk about it in few minutes. But before that, I would like to touch upon the clarifications which are there for TDS and TCS. Now, they have said that it is not applicable, these provisions are not applicable, TDS or TCS, on purchase of listed securities and electricity. But what about unlisted securities? Whether on purchase of unlisted security, TDS, TCS will be applicable? The answer seems to be yes. It should be applicable if it is more than 50 lakhs. But on listed, they have exempted it. Next question which arises is, if the invoice was issued before 1st of July, since TDS provision was applicable from 1st of July, and if the invoice is issued before 1st of July, what needs to be done? Whether TDS has to be deducted on the payment which is going to be made after 1st of July. What do you think? You can tell me in chat boxes. 50 lakh limit is every year. It is not in the first year. What do you think? Purchase invoice, whether 50 before 1st of July and the amount which is being received after 1st July, whether on that amount TDS has to be deducted? Okay. Purchase or payment, whichever is earlier. No. Okay. Yes. So if purchase invoice is received before 1st of July and the amount which is being received after 1st of July, then in that case, the TDS will not be deducted, because TDS on either of purchase or credit of amount or payment which is received, whichever is earlier, it is based on that. So if one of the event has happened before 1st of July, before the applicability, then in that case, TDS provision will not be applicable. Even on advance received on 30 June, but invoice raised afterwards, it will not be applicable. So purchase or payment, whichever is earlier, we will have to follow that. Now, what is the taxable amount? Whether we have to include the GST or we have to exclude the GST component. What do you think? Whether the TDS has to be deducted on invoice value with GST or without GST? Yes, it has to be without GST because it is on the invoice value. But say, for example, the payment has happened, advance payment has happened and invoice is raised later on, then it will be with GST, because then you cannot segregate based on the payment made that whether it includes GST or not. What about TCS? Whether TCS is to be collected on the GST amount? What do you think? Yes, on the GST amount, TCS has to be collected. TDS is not to be collected, because as I said, TCS is on the sale consideration, whereas TDS is on the purchase invoice. So therefore, on GST amount, we will have to collect TCS, but not TDS. What about purchase returns? Say, for example, we have purchased, but we have returned the goods. Now, TDS had been collected while the purchase invoice was raised. Now, the goods have been returned. What can we do about that? So, with respect to that, you cannot make any adjustment. You can adjust your TDS amount with respect to the next purchase which you are going to make from that particular seller. Or if there is going to be only one of the purchase, then he can just claim the refund. You cannot do much about it. What about export of goods? Whether a non-resident buyer has to collect, has to deduct TDS? The answer is no. So export of goods, TDS is not applicable. What about newly incorporated company? So for a newly incorporated company, the last year turnover will not be there. The turnover will not be applicable for the last year because it's a newly incorporated company. So for these kind of companies, TDS and TCS provision is not going to be applicable. Any doubts with respect to this, you can put it in the chat box. Okay. Now, with respect to the compliance check utility, as I said, a new utility has been created by the department. I think again. Okay. To check whether the buyer and seller have filed their last 2 years income tax return. But how do we check that? So you have to log in from this income tax website itself, but not through PAN, but through TAN. You will have to log in through the TAN account and not through the PAN account. Once you log in through the TAN account, you will have to create your login through the TAN. Here you will not use PAN because through PAN also you could go to reporting portal, but you don't have to go through your PAN account. Here you will have to go through your TAN account. Once you log in through your TAN account, in the pending actions, you can see the reporting portal. Click on the reporting portal. Once you go to the reporting portal, you will have to select new registration. First, you will have to create your login. Only then you will be able to use your reporting portal. Once you create your new registration, you will have to select form type as compliance check, entity category as company or firm, whatever it is, and you will fill all these details about the entity. Once you do that, you will have to fill the details about the principal officer. Here you need to give the details about the principal officer as to who is the principal officer of that particular company. Now, once that is done and once this data is submitted, the director of the company, who would be the principal officer, will get the login ID. The login would be his PAN and he would get the password. Now on the reporting portal, you will have to log in not through the TAN account of the company, but through the credentials of the director. So the principal officers of the company will be able to use the functionality on this reporting portal using their credentials. Once they are able to log in, then you can put the PAN and check whether the buyer has filed the return or not. I can quickly take you through this particular part also on income tax website. Let me do that. Let me just do the TAN login. I'm not able to log in somehow. Okay. Let me try directly for reporting portal. I was trying to do for the TAN login, but unfortunately I'm being logged out. Let me just quickly check. Okay. So this is where I have logged in. This is reporting portal. I have logged in using the PAN of the director. So as I said, we will not be logging in either through the PAN or TAN of the company to use this compliance utility. We can only check this compliance utility through PAN of the director, through PAN credentials and login of the director. Now here we'll have to select form type compliance check. And this is my ITDR. Authorized person type principal officer. Now here I have compliance check. Here I can add any PAN. I'm just adding one PAN here. Here it shows that PAN Aadhaar is linked, and whether it's a specified person, the answer is no, because I have filed last 2 years ITR. So I'm not a specified person. So here, what we need to check is we will have to individually either put PAN, or you could do a bulk search also, wherein you can download CSV template, you can fill all the PAN, you can upload all the PAN details, and you will get whether a particular person is a specified person or not. If he's a specified person, then in that case, you will have to deduct at the higher rate or collect TCS at the higher rate. If not, then you will have to collect or deduct at the normal rates. This search you will not have to do again and again. Once you have checked, that search is going to remain valid for the entire year, except in the case when there is a specified person. When there is a person who has not filed his ITR, and later on if he files by the due date, then he will be removed from that list. So only for the specified person, you will have to check. For others, where there is no specified person, you need not check again and again. Roshni, do you have any doubt?
This function is not a correct. Actually, I have put one PAN number who has not filed the return of the last year, assessment year 2021, and he had done the filing of assessment year 1920. Then also it is showing the specified person no.
Okay.
Or it means that this functionality is not showing correctly. That's why the people are still taking the declaration and the acknowledgement number.
Yeah, quite possible, because till now, wherever we have used, what we have been able to identify whether it is a specified person or not. But yes, in your case, it has happened. So could be a problem. Yeah.
But I have tried the individual
Yeah.
search also, as well as the bulk search also. Then also
Okay.
the issue is same.
Okay.
So how
Could
to
be a
rely
problem.
on
Yeah.
this? Yeah, how to rely on this portal, or how rely on the declaration?
Yeah. See, as far as this asking declaration is concerned, nobody is going to share the ITR acknowledgement or form 26A also. Even if you take declaration, that is not a reliable source, because person may give you the declaration, but he might not have filed the return. And a declaration does not absolve you from your liability. So in any case, we do not have much option until and unless I think this is particularly updated thoroughly.
And
You are mute. Yeah.
whichever is higher.
Sorry.
Okay. It's twice the rate. Deduction will be, if the return is not filed, then twice the rate, or 5%, whichever is higher.
Yes.
Then we can say कि in the case of only section 194C only, in case of 194C only, the rate will be 5%, or in all other TDS section rate will be higher, double the rate.
Yes, even for this particular TDS, TCS, it will be 5%, because here the higher rate is going to be 5%. Otherwise, 0.1 ka double is not going to be higher.
But in all other cases, then it will be double the rate. Means suppose in 194 JH everything, then double the rate will be higher of 5%.
Yes, yes, absolutely.
Thank you.
Yeah. Any other questions in specific? Specified person is when both your return is not filed. If filed for 1 year, then he is not a specified person. Yes, it is correct when both the years return is not filed. Any other question?
And suppose they will do the filing of assessment year 21, 22, then we have to remove it from the specified person.
Yes.
And for this reporting portal, the principal officer will be director. And in case of the cooperative society, the principal officer, we have to use the PAN number of chairman, treasurer.
Yes, treasurer we
Who's
can
PAN
use. Yes.
Or they can assign anybody as a principal officer.
No, not generally until you have somebody else as authorized signatory, which is added through your portal that he's acting as an authorized signatory, only then that could be done. But otherwise, I don't think beyond chairperson and treasurer, anybody can do it. That shall not be actually
Secretary?
valid. Yeah.
Secretary.
Secretary, yes, you can do that, but you will have to authorize him also on the website itself as a principal officer. Any other question?
And in case of LLP designated
Yes,
partner.
LLP
And in case of
designated partner.
partnership. And in case of
Partnership,
partnership from the
you can appoint any one of the partner. As in the company, you can appoint any director, managing director. In the case of partnership also, you can appoint any partner, managing partner. Okay. So getting back, as I said, the change is inevitable because this is something which was to take place since the businesses are changing at rapid pace due to technological changes, and all these changes are required from then the government side also to capture the transactions which the businesses are doing. And all these things appear difficult because they are new. We have not been accustomed to them, and every new thing has certain teething issues, but good things do take time because this is something which, as I said, is based on 4 pillars. One importantly is user friendly approach, and which is, I think, will happen in coming times. Once these issues are resolved, the income tax department is taking opinion from the stakeholders, resolutions are being made timely. So I think once all of that happens in the next filing season, I assume or I hope it would be a smooth filing season. So let's wait and watch. And I think the errors which are coming, the problems which are appearing, we cannot do much about it. We have to just wait for the resolution. It's not with a particular person, but it's with the entire fraternity. So if there are these persisting problems, obviously the due dates are going to extend it. So let's wait and watch how the things are turning up to, but let's keep filing whatever returns are we are able to file. So with this, I thank you all for patiently listening to this particular session. And if you have any particular questions, I'm happy to address it.
Thank you, Prerna ma'am.
Thank you.
Sakshi, is there any other queries? Sakshi?
Hello. Hello. Yeah, Prerna ma'am.
Yes.
Whether we have to do the filing or we should wait till 15th August. As when Twitter is going on, na, you should wait till 15th August, then you start the filing.
I think we should, sorry, yeah, please go ahead.
Yeah, because the acknowledgement is not generating and the capital, the long-term capital gain and short-term capital gain is also not matching with the pre-filled data, or in fact, it is not coming in pre-filled data.
Yes. See, wherever there are issues, for example, ITR 2, where we have issues with respect to the pre-filled data, we have to wait. But with respect to the returns which are there in ITR 1, which are salary return, we have received form 16. We can, I think, go ahead with those filings so that we do not keep the burden till the last moment. and we just file it off those returns which are getting filed. Of course, acknowledgement will get generated in due course once we have filed it.
And during the pre-validation also, we are facing so much issues because pre-validation is not done properly actually. But we are making the pre-validation and again it is showing to not pre-validated. Again, we have to do that e-verification.
Yes. That is something which is again a problem. Validation is not happening. So yeah, that is something which we will have to wait for. Cannot do much about it. Yes.
Now I request CA Hiral Sumaria to offer a vote of thanks.
Thank you, Sunny. Prerna ma'am has given a complete justice to the topic. Her explanation for each and every major vis-a-vis minor topic is being covered very well. One of my client accompanied me for a few minutes for the webinar. Even he got understood very well. So thank you, ma'am, for taking this lecture and webinar. On behalf of Bhiwandi Study Circle, we give a round of applause to you. Thank you.
Thank you so much.
Thank you, ma'am, for a wonderful lecture.
Thank you so much, sir.
Thank you, madam, very much.
Thank you.
Thank you, everyone, for your participation. Sunny,
Now,
should we declare the?
Now I declare here the end of the session. Thank you, every participant.
Thank you very much, everyone.
Thank you.